Hey guys, Michael here with Energy 360 Network by EnerCom. Excited to be bringing you another interview, this time with some powerhouse guests. But first, before I get into the interview, I just want to mention, if you are not subscribed, please go to Oil and Gas 360 and subscribe to the digital closing bell. You can go to www.oilandgas.com. Then there's a new show, the 360 Digital Closing Bell. It is hosted by me. We're going to be giving you a 2-minute update every single day on the things you need to know and giving you a digital stock ticker when it comes to the energy market. We had a wild first show yesterday, and I'm excited to continue to launch this going forward. What a crazy time to be doing something like this. In this interview, you're going to be hearing from 3 people, specifically the president of EnerCom, Aaron Vanderford, director and publisher of Oil and Gas 362, Turley, and the director of consulting, Genovese at EnerCom. What they're going to talk about is Aaron was part of a panel discussion at Haynes and Boone's office in Dallas last week. And really what they were talking about was the state of the market, what's going on right now, which is some crazy, absolute crazy stuff, and then getting into the state of the M&A and just some really interesting stuff. It's a fascinating interview, and I hope you check it out. But please, I'm going to shamelessly plug this again. Check out www.oilandgas360. Subscribe to the 360 Digital Closing Bell. We'll see you, get you in your inbox 3:45 every day. All right, with that, here's the interview.
Last week we had a really good meeting at Haynes and Boone, in which you actually did a very nice presentation. And I thought, being in the crowd, it was interesting to see that last week there was a very nice crowd at Haynes and Boone for this presentation and panel. I think it was very timely with bankruptcies and all those other things. Can you kind of lead us on a little bit about your presentation and what you found out?
Yeah, no, absolutely. Last week, as you mentioned, we were down in Dallas with Haynes and Boone in their office, and we were part of a panel discussion. So really thankful to be included as part of that, where we were discussing the current state of the market, M&A deals, and particularly M&A deals and how they're structured through a bankruptcy process. And so it was myself from EnerCom. It was a couple lawyers from the Haynes and Boone side, and then the president and CEO of Contango Oil and Gas giving a perspective of an asset they just bought. So it was a nice dialogue, and as you mentioned, timely, topical, and had a good crowd there. So happy to share a little bit of my presentation with you all, and we can kind of give a discussion, since it's been moving very quickly in the past week and a half, the markets. Certainly can give some more timely and topical thoughts to it as well. So I'll go ahead and share my screen here. There we go. So I gave a brief market overview and really started with the North American capital cycle and how this is the fundamentals for how we think about and allocate capital. And so you can see my little cartoon there, as we had good access to capital running up through this shale revolution. The Americans became a market share leader. And so we were able to raise capital, we allocated capital, we invested in development drilling, we generated returns and growth and reinvested those. And so as I think about the wheels here, as we go through cycles, and obviously a very cyclical industry, these wedges or these pies grow. And one of the things that happened is this raising equity and debt, certainly in the recent year, as well as the last couple of weeks, that pie has shrunk considerably. All right, and so as we kind of take a look at what funding has been happened here since 2014 on through 2019, the capital markets had been there earlier on in this cycle. So 2014, we raised $22.3 billion of new equity into the space. We had $8 billion of IPOs. As we go into 2016, when we saw prices fall into the 30s and even touch the 20s, $42 billion of new equity was there. Capital markets were there to support balance sheets. As we fast forward a little bit into 2019, we had one IPO, and that was a minerals company, Brigham Minerals, for nearly $300 billion, or $300 million, excuse me. And we had a few follow-on offerings, one of which was Contango, who sat on the panel with us at Haynes and Boone, as a part of a M&A deal. So if we look at, going from 42 billion down to less than 600 million in follow-on offerings, equity market really wasn't there. If we move on to kind of what's been going on with lack of access of capital, this is just a quick chart to show how we've transitioned to this free cash flow versus growth model over time. So in 2012, you can see most companies were outspending cash flow and focused on growth. And even through 2017, as capital markets were around, companies were still focused on production growth, though moving closer to a free cash flow type of model. And certainly today, as we've seen a number of releases over the past couple of weeks, only spending within cash flow, and likely actually to see production decline going forward is where we sit today. So, over that time, you take a look at, here's 2014 on through to 24, right up until our price decline. We've got break-even costs coming down. We've got great efficiencies that were being gained, and we've almost taken out to a point where prices are now in a price war with Saudi Arabia and Russia. This price war has gotten prices down to a point where we're likely to see things shut in instead of actually drilling and declining production. And so Russia and Saudis have both said, we want market share back. And let's be honest with what this is. It's a game of chicken. This isn't economic for anyone. And when we take a look at break-even economics, considering the social programs that oil funds for both Russia and Saudi Arabia, it's really the people of these countries that are going to be suffering the longer that we last. And so that'll be important, and we'll see how long we actually get there. And I know, Dan, you just published or co-authored a piece talking a little bit on the policy side on recommendations for our administration as we go through this process. Maybe you can share a little bit there.
Yeah, I'd love to. I published a piece on what to do, what the Trump administration should do. And certainly there's been a lot of ideas floated out there. I think one of the initial ones was to fill up the petroleum reserve and kind of try and sop up some of those excess barrels that are relatively low cost to try and provide some price support. And that's not a horrible idea, but it doesn't solve anything long term. And that money gets monetized across across a global economy. I think the real quick solution to this issue and resolving this issue is to place tariffs on non-North American oil. We have plenty of production here in the States. Certainly, we have some that comes in from Mexico and from Canada, and Lord knows Canada's been on restricted production for a while. We have enough production in North America to be self-sustaining. And if we place tariffs on imported foreign oil, especially OPEC Plus and Russia, I think we would see their price, which is Brent. I think we'll see that go lower to a point of pain for both of them, so that they get to the table. And the reciprocal of that is that we'd see West Texas rise and support the U.S. industry. When we think, and certainly with the virus, the coronavirus, we see when we have dependency for means of production and for critical resources that isn't controlled here, we really have a national security issue. We see that with penicillin. We see that with masks, medical masks. And I think oil is very much that way. I think that Saudi Arabia and Russia, I think this is an attack on the U.S. or North America shale production. And I think we need to treat it that way and defend our national security so that we have that security in energy, which is the building block of all industry, all economy. We can't take another hit. It's bad enough that we're shut down People are losing their job in service industries and in restaurants and hotels and other types of things. We don't need another industry to be suffering, not only because of the demand destruction related to the coronavirus, but also because of this price war between, in essence, two national oil states. And that's not free trade. That's not fair markets. When you have that type of power, when you have an OPEC. So I've read some comments on the article, and some people were saying, the people who are really going to suffer are the Americans, and I beg to differ. I think we look back to January, we had $2.50 prices at the pump here in Colorado and $60 a barrel. That's a livable barrel price, and those are certainly low prices at the pump, and people weren't complaining then. So I think there's lots of ways to do it. This is quick though.
Things that I've been hearing a couple people talk about, and I think that probably some of the other members of this price war, Saudi Arabia and Russia specifically, are forgetting about the U.S. Is our power of a bankruptcy court. And so when we think about where we sit and if this is prolonged as well, these companies aren't going away, and neither is this production. And so, equity will become, or debt will become equity. We will kind of reset and continue to march down a path. And our economics is competitive. And so, Dan, as you mentioned, who's going to suffer? I think we're pretty well positioned, given that our oil and gas economics for our corporates aren't tied to a larger social program, but they do create a national benefit, and so that will be something that will play out here in a little bit as well, I think.
Yeah, I agree. I think, and one of the things that I put in the article is that a tariff such as this doesn't need congressional approval, and it certainly doesn't drain the U.S. Treasury in terms of some sort of bailout. I'm always fearful any kind of bailout. Anytime you throw more money into the system, that tends to get diffused, like I said, across a global market space, and you end up rewarding the people that really should be being punished. So that's my advice to the Trump administration. I think it's good advice, and I think it's something that could happen as early as tomorrow if they woke up and decided to do so.
Yeah, no, absolutely. I appreciate you sharing that thought, not only with us, but a much larger audience, and being an advocate for our clients as we're looking for a path forward.
Hey, Dan, that has been very well received on Oil and Gas 360, as well as our social channels as we push that out. We're just about out of time, guys. How about around the horn and just anything else you got to cover? We got about 2 minutes. So, Aaron, any other thoughts?
Yeah, no, I think it's certainly a dynamic and changing environment, changing hour by hour, minute by minute. But as we're looking through and thinking with our clients, there's a lot of levers to pull, and I would say that we're an industry that's pretty resourceful, and we'll look to all those levers to manage a path forward, and we'll see how we go.
Yeah, I would close with this one. Certainly hope everybody out there is safe and healthy. I feel for those folks, in the oil and gas industry that might be thinking about that maybe they're going to lose their job. I hope we turn this around pretty quickly. I hope the administration takes action. I hope maybe even if some of these companies do go through a bankruptcy, I hope that it's well planned, kind of going in, so it's a quick turnaround, so that these folks, whether they be an accountant, whether they be an engineer, whether they be working on a rig, I hope that they can keep their job and continue to support their families in this critical industry that we have here in America.
Hey guys, that was absolutely fantastic. Dan, thank you for that note. And again, my name is Stuart Turley. We've had a talk with Aaron Vanderford, president of EnerCom, and Dan Genovese. He is the director for the EnerCom Consulting Services Division. And our thoughts and prayers go out to all of the United States and anybody affected by this virus. So thank you, and stay tuned and sign up for the Oil and Gas 360 newsletter at oilandgas360.com. Thanks, guys.